Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Hi. Welcome to the podcast. I'm Don McDonald. Tom's over there. We're here to talk about money. We're here to talk real money. That's what we're doing all the time, talking real money, because it's called Talking Real Money. It's the Talking Real Money podcast. See? So we're glad you're a part of it. And if you want to ask us questions, just give us a call at 855-935-TALK, 855-935-8255, or send your questions in at talkingrealmoney.com, talkingrealmoney.com. Today on the podcast, we want to talk about retirement. We talk about retirement a lot.
Because we're projecting?
Because we're going, when do we get to do it ourselves? No, I don't want, that's why I'm pursuing all these other things. What would I do if I just stopped working?
How many times can you clean the gutters?
Boring.
Come on.
Oh, no. I can tell you, I am too danged old to be climbing up a 2+ story ladder to reach. I can pay somebody to do that.
How about the garage? How many times can you clean the garage out?
I was working on that this weekend.
Really? Wow.
I was. We're almost to where we can get a car in.
Oh, you would be
red letter day.
My neighborhood. There's only one person who can park their cars in the garage. That person
and
is
it's
me.
you. Yeah,
Yep.
I know. Of course it's you.
Yeah. Sorry.
Of course it's you.
Sorry.
Oh Lord.
I just drives me nuts.
We're going to talk about retirement a little bit. Remember the Great Resignation?
That's a good point.
It's kind of on its last legs, isn't it?
Oh, I think it is. Yeah.
I think people are going, resignation. That means not working. Great retirement. A lot of people during COVID retired early, and they're now rethinking their early retirement and saying, maybe I go back to work. And a lot of people are saying that they are planning now, where they were going to take it early before, now they're planning to delay retirement for a variety of very interesting reasons.
Yeah, I mean, the numbers are pretty astounding when you consider, as you just said, not too long ago, people were like, I'm not going back to the office. I'm not going to work full time. You mean, I don't care if Elon Musk tell me I have to come to the office 5 days a week. I'm not going to do it. Elon's told you, well, then find another place to work. Most places are being a little more flexible, but 25% of those people that were thinking about retirement say they're now going to delay it. This according to survey by BMO Real Financial Index. Don't know those folks. But here's the interesting part. 36% of them said they have had to live off of their savings recently because their income is not keeping up with the rising cost of living thing called inflation. 21%, almost a quarter, say they're putting away less. And just a little idea, you want to be putting away more if you're thinking about retirement because you're going to be soon without a job, I guess.
By the way, BMO, that's Bank of Montreal.
Oh, okay. Should have known that, but don't do that much banking north of the border. So
well, you're close enough to that border.
That's a good point. I can see it from here. So here's the thing. Of course,
you and Sarah Palin, you can both see it from your.
I knew that's where we were going, and I had to say it. The thing is, then once inflation rears its ugly head, everybody and their brother has an idea of how to beat inflation, or how to stay up with inflation, or how to deal with it. And our friend Susie Orman, and I don't want to make it a weekly occurrence to pick on her. Well, she says,
"Oh, please do."
Chuck
Jaffe will listen if you do.
It's true. She actually said something I agree with. She said the only asset class with a track record of earning more than inflation is stocks. Hey, Susie, we agree with you, finally. But then it always seems to be a drill down into like, okay, which things do you buy then?
Yeah.
You
okay.
know.
Yeah, she's not saying buy all of them.
I know.
Susie can't bring herself to do that. She has to be this. She has to be the picker of special things.
I know. And those special things are banks, insurance, and then my favorite of all time, thinking we've talked about for, I don't know, 25 years, precious metals, stuff like gold and silver and all that stuff. That's how you protect yourself. Well, just out of curiosity, how is gold this year in a time of pretty rampant inflation? How's it done?
It's exactly kept up with. It's lost nothing. Hasn't kept up with inflation, but it's lost you nothing. It's one of the few asset classes that has lost nothing, but it didn't make anything, and it certainly didn't keep you ahead of inflation. And what's fascinating is that the 15-year, according to the GLD ETF, the Gold Spider, according to Morningstar, its average annual return was 6.6% per year. Well, that's just nothing close to stocks. And I just out of curiosity went and looked at the Spider Bank ETF. Yeah. That's our other suggestion. It's down 10% year to date, 9.5%. But I cannot believe its 15-year track record. I just can't believe it. I'll give you 15 if it's available. I would rather go for the longer number than the shorter. Tom, its 15-year track record is 1% per year on average.
Wow.
So over maybe 15 years.
She's turned into a value investor. She's buying something that's beaten down.
And what was the other one she picked?
Insurance. Is there such an index?
Close.
There's an index for everything today.
Oh, there are ETFs for everything.
By the way, as you know, because
Spider S&P Insurance ETF.
Yeah. How much?
And it has over the last, it's barely moved at all this year. It's like gold. It's just like even. 15-year return, 6.5%. So what she is looking at is battered assets. These are definitely battered assets.
We say battered assets, to me, I think of like fish or something, but that's a whole other thing.
Because he's hungry. It's time for lunch, isn't it?
I know. Between me and my lunch. Okay, so here's another piece of advice if we're going to pick on her a little bit that I just abhor, because I just watched a webinar she did, and she said, well, now with the markets, going to be way down, you're losing all kinds of money, et cetera, et cetera. Keep 3 to 5 years of cash. 3 to 5 years of cash. And I thought,
that's a lot of cash.
That is a lot of cash. And I think in an inflationary time, that's horrible advice. But let's talk about some of the places you could put. I want your reaction to each one of these. High yield savings. I looked it up. You can go Goldman's Marcus plant. You can get
I have some money with them.
70 basis points right now in the high yield savings. What do you think of that?
Well, I found Lending Club doing 1.05.
Okay, but in a general sense, as a place to hold your cash, what's your take?
Well, it's about as good as you're going to get.
Yeah, not quite, because you can go Capital One as a 1-year CD now paying 1.3.
No, but I mean for immediate liquidity. Immediate liquidity.
5-year that's paying 2.25.
Yeah, but even then, you're going to be better off. I'll reserve. Give me some more. I'll reserve my comments.
Here's another couple of ideas. How about the short duration bond ETF, ICSH, the BlackRock short-term bond, ICSH.
Wait, hold on. I have to look it up. Morningstar, ICSH?
Yep.
All right. iShares ultra short-term, very
ultra short. Yep.
A yield, the SEC yield is 1.18. The actual 12-month yield is 0.42.
Wow.
The fund itself has treaded water. You've made nothing year to date.
But it hasn't gotten crushed.
Its average annual return, though, over 5 years, which is all it has, is 1.5%.
And how about this? The short-term treasury. How about the SVOG? SVOG.
Oh, SVOG.
Yeah, short-term treasury exchange traded fund. No?
SVOG. No, there's no ZVOG.
Oh, man, I wrote it down wrong.
Whose short-term treasury is it?
I don't know.
Okay, you wrote it down wrong.
Can't trust my own writing. Oh, well. But we
Can't
know
do that one for you.
But you could type in short-term. Somebody has a short-term treasury ETF. I don't know who.
Oh,
It
sure.
must be.
And they'll all perform.
Might be
Short-term
Schwab. I mean,
treasury.
again, we know that those have had some volatility this year, even shorter term on the duration side, because rising interest rates, right?
Well, the Vanguard short-term treasury ETF, VGSH, has the current SEC yield. You see, this is where yields are coming up.
Yep.
So the SEC yield looks better than the previous 12-month yield.
Sure,
This
it
is what
does.
happens in a rising rate environment. The SEC yield is 2.5. The last 12 months, though, is only 0.37. And the fund
Yes.
has
the actual
lost
return. How much?
2.5%.
Yeah, you go. So you're
A negative. Wait, that's
right. So you got the 2.5 minus the loss of 5,
it's
and then
5%. It's a 5% loss. And again, 10-year average annual return has been 0.75% per year.
Ooh, you're not.
So
making
they're
much
not
of
going
that.
to keep up with inflation. They're certainly not going to help.
Okay,
you with
so if you had to
inflation.
pick out of all those options I just gave you, what would you do with your short-term cash needs?
Depends on how short my short term is. If it's my
6
emergency
months to
money,
a year, 6 months to a year.
6 months to a year, I'd
Yep.
be looking for the highest yielding short term, the savings accounts, the high yielding
Yeah,
short term
I agree.
savings. I found one, by the way, at
You
used to be
found one,
Comenity
you
Bank.
said. Yeah.
Well, no, I found one, Comenity Bank, which is now called Bread Financial.
Bread, like is spreading your jam
bread,
on
as
it?
in yum yum yum. Yeah.
Okay.
1.17.
So there, did
That's
you find that
high.
a bank rate?
No, I just went to Bread Financial because I have an account at Comenity because they were paying 1%.
Because it's
and now
lunchtime and you were
paying
thinking about a sandwich.
1.17. I was. No, I
Okay.
past lunchtime.
Big sandwich, a lot on it. Okay, so you would go with the high yield savings. And again,
I would go
I think
high
if you
yield
go to
savings.
bankrate.com, you can find some good options there as well. Yeah, I did not agree with you here because the CDs ties the money up. Short duration ETFs, even there, you're facing some risk of capital loss.
Okay, but we haven't solved the problem of inflation yet. Where's the inflation
solving
solution?
the problem of inflation is you need to number one. That's easy. That is so easy. Number one,
I know, but I thought somebody had a solution that we were going to
part one
berate
is
and
to
belittle.
Completely ignore Susie's cash advice. You should be limiting cash. You should not have a lot of money in cash. And she's going to say, well, it's protected you from the market this year. Who knows what the market was going to do or is going to do? Nothing. Nobody knows. So you should limit your cash. And number two, I mean, you need to have a plan that's stress test. Again, met with a woman today who doesn't have a plan. She has all these investments. There's no cohesion to it. There's no purpose to it. And if you have a plan that has looked at inflation for a very long period of time, I know it's higher today than it's been for many, many years, but still it factors in inflation for the long haul. If you have that, you're able to do number three, which is ignore the noise and stay the course. Because again, we know people that do all these other things with their money, change course. They simply end up with less. They end up with more stress and they suffer. So again, there isn't one investment. Again, you should have a considerable amount in stocks, money in bonds, and a very small amount in cash. That's how I would invest. But again, if you have this plan, you're not worried about all this because this comes and goes. Whatever's next.
Well, right,
but
one of the things that we see a lot is people who are in retirement or heading into retirement getting some of this really, really bad advice on what to do when they get to retirement to generate income. And that's also got to be part of the plan. You know, there are a lot of people who say, well, just buy a bunch of dividend-paying stocks or own real estate or whatever it might be. And again, that those kinds of things may need to be in a portfolio, but only as part of a bigger, broader plan for generating income in retirement. And if you have a plan, then you know when you can afford to retire. You don't have to say, well, I don't think I can retire early. You know when you can.
Yeah. And again, those are ideas. And there are a lot of ideas, but you have a portfolio that takes in all of these things. So when the idea comes along, you say, well, yeah, I already own that. Or what about this? Yeah, that's already in my portfolio. You're not adding things on as the circumstances change, which is something I see a lot of salespeople do in this business. that they know that you're paying inflation. You need some tips. You need this. Those things are already built into your portfolio prior to whatever disaster or whatever economic situation befalls you.
Because remember, stocks actually have done quite well in periods of inflation. Stocks themselves have done well. Now, stocks have not done well in periods of severe recession. However, it really isn't even in the period of severe recession. It's in the run up to it, because stocks, particularly the stock market, anticipates future events. If the stock market expects there might be a recession in the future, the prices are going to go down in advance of that recession. And people, we hear this all the time. Well, wait, we're in the middle of the recession. Why are stocks going up? Because they went down before the recession. This is why you can't play this game, because the market is not something you can predict. The market is predicting already. You can't predict predicting. It really becomes complicated.
It is, as they say, baked in the cake.
Yeah, it is. If you have questions for us, please call us at 855-935-TALK, 24 hours a day, 7 days a week. You can also call us live on Saturdays when we do our radio show that becomes a podcast under normal circumstances, unless our radio station messed up with the recorder, which might have happened in the past, like recently. Plus, you can send questions in at talkingrealmoney.com.
You are killing me. Yeah. Keep going. Why not?
Plus, if you want to just sit down with Tom Cock for an hour and a half, 3 hours, 5.
Which very few people do, but okay.
Very few people want to do. Or actually, you could sit down with another Vestry by Apella advisor, which, by the way, is just going to be Apella in not too long. Just want to warn you in advance. So we're going to rebrand because we merged with Apella Wealth. Anyway, go to Vestry.com and set up an appointment with one of our advisors. No cost, no obligation, no sales pitch.
I will make an offer right now. You know when I like talking to people?
You love talking to people.
Saturday mornings.
Really?
Yeah, I do, because
so
I'm
what
already
you're saying
working.
Is you're saying go to Vestry.com and set up an appointment for Saturday morning, and it'll probably end up with you, because the other advisors are going, I'm not doing it on Saturday.
Yeah.
Okay.
No, I already have
a
couple booked for the summer. I love doing it because I'm already there and I'm working. I think it's a great time. Warms me up for the show. So yeah, go ahead, set them up. Line them up.
One-on-one time with you?
Yep, absolutely. I'll be there. Count on it.
Man, I hardly ever get that.
And your life is so much better for it too.
Yeah, probably. Okay. Things we need you to do. Tell friends, please. I don't see this very often. Social media share. If you go to the major podcast services, there's often a button off to the side where it says share show. And it'll give you a link, or you can copy the link and share it. Do that for us, please. Check out our YouTube video cast, podcast, major podcast services. Am I forgetting something? I think I've covered everything.
Home phone number.
Good. Then, Tom, go have lunch. Slap something on bread.
Oh,
what are you slapping on bread today?
I got something pretty good. I got a little leftover barbecue chicken. I'm going to turn it into I'm going to take a little, what's that? Cheese, put that over there. I'm going to turn it into a little Philly cheesesteak kind of thing. It's going to be pretty tasty.
Oh, Philly chicken steak.
I think I have some peppers. I might cut that up too.
Oh, this is sounding good. I'm making tacos tonight. So.
Ooh. Yeah.
It's Taco Wednesday.
Yeah, makes sense.
What day is it? I don't even know what day it is.
He's in his room. Never comes out.
I'm in my room. It doesn't matter.
The sun is still up.
I got to go turn this into a podcast now because it's got to go out today. Go away. Goodbye. Go eat lunch. You guys go about your business. Nothing to see here except two people sitting around talking real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, notified the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?